Finelli to look into the issues as presented tonight with respect to Cedar Alley, and then to make recommendations for the Township Committee to consider at a future meeting.
Make that motion.
Second.
Any comments? Roll call.
Perez.
Yes.
Siegel.
Yes.
Valari.
Yes.
Miliani.
Yes.
Torriello.
Yes. Okay, now I'll turn it over to Mr. Morrison, Township Auditor.
Thank you.
Thank you.
We delivered our report. I'd like to go over first what the objective of the audit was so that you all understand what we're trying to accomplish as we go in. The first thing we're trying to accomplish is to review your financial data and determine that your financial statements are fairly stated, meaning there are no material errors embodied in them, and that the appropriate accounting standards, which are statutory accounting requirements promulgated by the state of New Jersey and in particular the Division of Local Government Services, have been followed in the accounting process and the development of the financial data for reporting purposes, and that the standards that you use were followed consistently from year to year. Right, that's the primary objective. That's the same objective that an auditor of a Fortune 500 company starts out with. Are the financial statements fair? Did you use the right standards? Were you consistent in their application? That's the first objective. The second objective, because you're a government entity and because the state of New Jersey has deemed it appropriate, the audit scope gets expanded to require the auditor to report on internal control matters and compliance with laws and regulations in accordance with government auditing standards, which is a separate set of standards issued by the Comptroller General of the United States. So we as part of our planning, as part of our audit implementation, we evaluate the internal control structures over the significant phases of your transactions. We test the controls to see if they're working. We make recommendations when we see areas in need of improvement. We also test for compliance with laws and regulations. That covers a very broad spectrum. It could include IRS requirements for timely filing of withholding taxes. It could include compliance with the local public contracts law, with the budget law, with insurance laws. There's a variety of additional statutes that you have to follow. In addition to that, if the committee has imposed any operating requirements through ordinance, we would follow those. The process involves, generally we come in and we gather information first. We budgets, read minutes, prior year audits, et cetera, et cetera. We perform analytical procedures on the data that's made available to us, where we look for things that year over year are significantly different, and we then follow up on those areas asking for explanations. For example, if we saw a 100% increase in revenue from alcoholic beverage licenses, we would ask the question, why? And if it turns out that you doubled the license fee for alcoholic beverages, it makes sense. If you didn't, then we'd be wondering if you issued a new liquor license. And if that didn't work, then we'd be digging deep as part of our substantive audit procedures to find out why that difference existed. So what we try to do is identify areas that are the most risky based on the analytical things we do, and we focus our audit procedures there. After we're all said and done, we issue our reports. There are 2 reports on pages 2 and 3 and on 4 and 5. The first one is the report on the financial statements. The financial statement opinion notes in paragraph 3 on the first page that there is one financial statement that is required by the state of New Jersey that's not included in your financial statements. It's a statement of governmental fixed assets. I have to put that in there because the state says you're supposed to have it and you don't. I do not think it is a big deal because it is a document that would get very little use, right? For insurance purposes, you have appraisals of all township-owned land, vehicles, buildings, etc., and that is the basis for your insurance coverage. I'm sure that is a very realistic appraisal of the value because you're basically insuring for replacement. So there's no insurance issues. The only other issue would be if you're worried about things leaving unauthorized. The problem with the general fixed asset accounting is that the threshold is $5,000 before an asset goes on the list. And historically, over the years, I've found that the stuff that tends to walk out the door is not the $5,000 item, it's the phone, it's the computer, it's, you know, the lawnmower, that type of thing that wouldn't be on the list anyway. So it doesn't improve internal controls. So while we have a recommendation in the back of the report regarding fixed assets, you know, I say on public record that if you've got anything better to do with your money than hire an appraisal company to come in and do an identification and valuation, then do it. Because for cost benefit, there's probably a significant cost in doing a full appraisal and creation of this record, and there's very little benefit to be derived from it from my perspective, and recognizing money is tight. I'm not going to push it.
I think it was on our audit findings last year too.
It may have been.
The inventory asset.
Well, again, it's something that the state requires. There were towns when they first passed the. It was done by a directive of the Division of Local Government Services. When people started questioning it, they turned it into a regulation. It was published and is now part of the New Jersey Administrative Code. So it is a built-in regulation now, which means that's part of the compliance auditing we do. Right? What's a significant compliance? Fixed assets. Well, but like I said, there are certain regulations that impact your financial reporting, that impact your ability to put together numbers for financial reporting, and then there is this schedule which stands alone and has little meaning for anybody. And if that's the only recommendation that has to be made in the next audit, I would say you're doing a heck of a job. The second report is on our work that we did regarding internal controls over financial reporting and on compliance with laws and regulations. A lot of what we report on in this report are matters that we covered back in February. We have 3 material weaknesses in internal control and 3 significant deficiencies. Now again, remember the objective of internal control over financial reporting is that if mistakes are made, if errors are made, if omissions from the records are made, that the controls are such that they will be identified and corrected in one accounting cycle. What we found, and we went through this extensively, so I don't want to beat a dead horse on this, but what we found at budget time was that when we came into the records were not in any kind of a shape that would allow for financial reporting based on their condition at that time. The 6 items that we address in our letter on internal controls and compliance appear on pages 89 and 90 as part of the general comments. And as you'll see, the first one, 2011-1, general ledger maintenance, we covered that back in February. Cash reconciliations, we covered that back in February. Those 2 items are very important because those are the proofs and checks and balances in financial reporting. The general ledger is a double entry financial summary, and if it's not in balance and it doesn't tie back to the subsidiary records, any financial reporting that would come off of the general ledger is not going to be reliable. Similarly with cash reconciliations, if you haven't reconciled and proved out your cash balances, you're exposed to the risk that transactions occurred and weren't reported or were reported for the wrong amounts. So the cash reconciliation, general ledger maintenance are 2 functions that need to be done as proofs of financial transactional records.
So Bob, can I ask you a question? So on the cash reconciliations, if I'm reading this correctly, they were completed through September 30th with the exception of, it looks like, the sewer operating and recreation trust fund. Is that correct?
They were completed through October 31st with the exception of current sewer and recreation, which were done through September 30th.
So does that include COA?
Yeah, bank accounts are reconciled.
Through, okay.
Yeah. Okay, the third item on the list was something that we didn't come up with at the time we're helping prepare the financial statement, this one came up as part of our audit procedures. Basically, what we have going on is a lack of good encumbrance accounting as required by, again, regulation of the Department of Community Affairs. The idea, this is not meant to be a punitive regulation. The idea here is to guarantee budgetary controls that there is an appropriate authorization and approval process for expenditures, and a guarantee that commitments of the township's monies will not be made without there being available funds, right? Essentially, without good encumbrance accounting, the town is exposed to the risk that somebody's going to buy something that you don't have the money to pay for, right? Over expenditures. Over expenditures are not good, and without good encumbrance accounting, you run a risk of having over expenditures. So that one came up during the audit process rather than the financial statement preparation. The three that we considered significant deficiencies, we also covered to a certain extent back in February. Cash receipts and disbursements journals. We don't have complete, accurate cash receipts and disbursement journals. For some of the outside offices, we don't have them. We don't have cash receipts journals at all. Payroll deductions register. Nobody could present us a payroll deductions register. Apparently, whatever payroll proofs were being done off of the reports that were being provided by the payroll processing agency. They don't constitute books of original entry, and they don't allow for the necessary cash reconciliation proof and proof of deductions made and payable. What we're looking for, and I've had the conversation with the CFO, is basically there should be a record maintained that says, here's what was deducted for federal withholding tax, for Social Security taxes, for Medicare, for state income taxes, for pension deductions, health benefit deductions, etc. The deductions are then matched up with the payments made by the finance office to the various taxing agencies or back to the general account of the township, so that at the end of any month, you say, how much money do we have in the payroll agency account? It's X number of dollars, and they can be identified. The reason we have $3,000 in the payroll agency account is because we have to make a payment to the pension system that wasn't made, or we have to make a payment of unemployment taxes that wasn't made. So it keeps track of all the money, and it identifies balances in the account. That's the objective there. Once again, the payroll account, we did not have a formal record of cash receipts and disbursements. What concerned me there is that you're building a balance in the payroll account, and it looks like the balance was growing, and sometimes it actually went down a little bit, but it was occurring because the amounts being deposited into the payroll account did not match the gross payroll on the payroll reports. Right? It can happen, but that's what internal controls are for, right? If you make a mistake, if you guess on the number because the payroll company is running late, and a good internal control would say, all right, what's my proof? I have a difference. What happened? Oh yeah, that's right, I made a deposit and I rounded because the payroll company hadn't got me the reports on time. I have to get that money back out and put it back where it belongs. That's what the internal controls are about, and that's what we're really talking about here, is developing processes and procedures to make sure that there is a full accountability for the township's money. As far as the financial statements go, the numbers that we developed with Lorraine as part of the financial statement budget process back at the beginning of the year held up pretty well during the audit process. The one big difference in the general fund, if you look at the fund balance, back in February we reported at $592,000. At this point in time, it actually went down to $586,000.
What page are you on?
I'm on page, right now I'm on page 7. And on the right-hand side, about halfway down. So the fund balance went down from the unaudited numbers to the audited numbers by $6,000. Two things happened there. The first thing that happened was that we found a bill that was posted against the wrong budget year. and we had to move it. It created an over expenditure of the 2011 budget, but in turn, it created excess reserves in 2010 that lapsed. That's really the difference. So it was a $20,000 over expenditure, a $6,000 decrease in appropriation in fund balance, and a $26,000 increase in the balance of reserves lapsing to get you there. So essentially, where we had you at budget time was pretty much spot on. You're going to have a deferred charge you're going to have to raise next year that we didn't catch until we were in the audit process. But other than that, where we ended up was pretty good. You still have, if you'll note, you still have some unallocated receipts. Hopefully, as the year is going on, those people are coming forward and saying, wait a minute, I didn't get credit for this, I didn't get credit for that. Particularly if there's taxes involved, you've got a tax sale coming up. If somebody is being noticed saying that there's a delinquent tax balance, that may be where the differences are, particularly if they can produce evidence that they paid, because we have money sitting there that has not been allocated properly. What will happen with that, if we get through the tax sale process and nobody comes forward, this will go through a little bit of a ripening process, and when it's fully ripened and we're confident that there is no allocation that has to be made and is forthcoming, then a recommendation will be made to cancel it to your fund balance. So it'll sit there, hopefully get allocated, but if not, it'll turn into a revenue. We suspect that a good chunk of it is township revenues that just never got posted. So if it ends up in fund balance, that may be exactly where it belonged.
What's the amount of the deferred charge that you said that we're going to have to come up with that was found?
The new one is
during
the $20,910.65. What it was a bill for 2010 fourth quarter sewer charges that got paid out of the 2011 budget. We also, I'll bring this up too, because I'm not sure if the committee's aware of it, but it's legal. At some point in time, a deferral of 1 month worth of state health benefits payments was made by the township. So that during 2011, you paid 12 months worth of health benefits costs out of your budget, but it wasn't for the calendar year 2011. It covered December of 2010 through November of 2011. That had happened the year before also, so this one goes back at least a couple of years. Somewhere along the line, I don't know if the committee ever was asked to approve it, but at some point in time, a payment was deferred. And again, the state health benefits plan made it available to every municipality to do, so there's nothing wrong with it. However, we have now, in the notes to the financial statements, disclosed a potential contingent liability. What would happen if you left the state health benefits plan, which is something that you may consider at some point in the future if their rates keep rising at the rates they're rising, but that's your insurance consultant's bailiwick and not mine. But if you were ever to leave the state health benefits plan, that deferred month would be payable at the point you leave. So you would then end up with 13 months worth of health benefit costs in a single budget year. So we've disclosed that as part of the notes of the financial statement.
Would there have had to have been a motion for this, or a resolution for this, or to defer these costs?
I would have hoped so, but I'm not sure that it's necessary, because when they made it available, there were no rules that came with it.
The $20,000 we're talking about that was paid, is that something that should be reimbursed then back from sewage?
Where? What sewage?
The other 3 quarters were also paid out of the same place. So this was not something that was being paid out of the sewer utility.
Is that something that should be paid from sewage utility?
Different towns operate their utilities differently, and the question becomes, where some towns don't have utilities, they run everything through their general operating funds.
Oh, so this doesn't have to do with the sewer utility, it has to do with the sewer, the expenses here for the municipal building.
It was a $26,000 bill, so I don't think it was the sewer bill for the municipal building.
That sounds more like a hydrant rental.
Maybe it was hydrant.
Oh,
You know what, maybe it was
All
hydrant.
right, okay.
But
Yeah,
it, you know what,
there's
it probably
nothing in here
was.
somewhere, I read
I
hydrants.
think it was hydrants.
Yeah.
I misspoke and I apologize. But it was charged against the wrong year. So we had to move it.
Oh, it was the one that was deferred from 10 to 11?
Yes.
And it started in 10, yeah, okay. I read that.
Yeah, it was, right, it was fourth quarter 2010 was charged against 2011. We caught it and we moved it. So that was really the only thing of major significance that changed your financial statements from where we were back at budget time.
Back in February, when we
Right.
started the new,
Right,
when we had the.
right, when I was in the last time.
Okay.
Right, if you look at the annual financial statement, that it's that about 80 pages on the 11.5 by 8.5 by 14. Those numbers held up pretty well, which we're very happy with. As far as the governing body's signing of the affidavit and passing of the resolution, you're required to have read the general comments and recommendations, which start on page 88 of the document and go to page 100. We have several recommendations, and before I go through them, I would like to point out that the reason we make recommendations is not, we're not in the gotcha business. We're trying to point out things that need improvement, and that if they are improved, the financial reporting process will improve, the numbers will become more accurate, they'll become more timely, more reliable, and there'll be greater transparency. So that's the objective in making recommendations. We're basically working off of standards that the state of New Jersey and generally accepted accounting principles say you should be following. Not quite the hit list that the best practices list has, but something similar. Anyway, if you go back to the last page of the document, we summarize the recommendations that we're making. And I think the easiest way to go through them is to go one by one, and I'll discuss them. The first recommendation we make is that resolutions awarding contracts based on state contractor purchasing cooperative pricing be presented to the committee for approval prior to the commitment of funds when the annual estimated costs of the goods or services may exceed the bid threshold. That's built right into the contracts law, right? There are a variety of exceptions to the public bidding requirement, and the use of a state contract, which is a bid process performed by the state of New Jersey, is a legitimate exception. However, when you use state contracts and the amounts that you're spending on those state contracts are going to reach or exceed the bid thresholds, then those awards should be coming to the governing body for a formal approval. So when it's as they would if they were bid by the township on their own. So our recommendation is that when you hit the bid threshold, something has to come to the governing body, and it goes beyond state contracts. It should be for any of the exceptions, professional services, et cetera, et cetera. You do a pretty good job on professional services. The problem we had, that's the next recommendation though, coincidentally. And the recommendation there is that public service contracts be publicly advertised and include not to exceed amounts, right? You're bringing your professional services awards to the committee. The committee sees and is approving the hiring of the professionals. What's not happening, and what's required by the law, is that a brief advertisement indicating that the committee has taken an action to appoint a professional, that should be appearing in the local newspaper. We didn't find any evidence that it is. The second part of the issue is a budgetary one, and it deals with the CFO's ability to certify availability of funds, right? If you award contracts to professionals that are open-ended, you risk the possibility that one of us dear professionals might go off on a tangent and spend way more money than you can afford to pay us. But if you don't have something that would put a brake on that, such as a not to exceed amount, you're at risk that with all the best of intentions, you could end up overspending your budget.
Like we did with you, with respect to your contract to reconcile the COA funds, with
Yes.
not to exceed.
Yes. The next item on the list, obviously, this is one that you can check off as having instituted a corrective action. That a full listing of the claims presented to the Township Committee for payment approval be incorporated into the official minutes, and that the formal action of the committee to approve claims include the total amount of the claims approved. Here's the problem an auditor has with that, right? First of all, let me say that I was born skeptical, and I get more skeptical every day. So when I come in to do an audit and I see a motion in the minutes saying bill list approved, I say, okay, good. How much? Right? If your CFO tells me that the bill list that was approved was for $3 million, and I go back to 2 committee members and they say, oh no, it was for $1.5 million, well, now I have a problem. I don't know what was approved. Right? So to eliminate any question as to what was approved, right, we'd like a list or at least the total.
Well, we
included in the
had
minutes.
bill listings in
I
2012.
did it tonight,
Yeah.
because I read your recommendation.
Oh yeah. See, the problem with just the bill list is that who knows what bill list got slipped into the minutes if the action of the governing body doesn't have an amount.
Right.
Oh, so you're talking about the amount
yeah.
to be read.
That's why I did that tonight. That's why I
Okay.
had
Right.
that dollar amount.
So the objective here is to make sure that the bill list agrees with the action
Makes
of the
perfect
governing
sense.
body.
Yep.
Right. Again, I'm
Perfect
skeptical.
sense, yeah.
No, it's an easy, I mean, the information was always there, it just
Reading
takes
it.
the extra step of reading
Right.
it, so it's.
Can I interject something just real quick? That bill list then will still be part of the agenda, and it should appear in the minutes in its entirety, so that there's a triple check that dollar amount printed on the bill list agrees the motion.
So you're saying in the
So it
minutes that
should-
we approve at the next meeting, that dollar amount needs to be in the minutes?
And the bill
and the
list
bill
itself.
list.
Well, the minutes, not what you're, it's attached.
Yeah.
Yes, that's fine.
If the auditor has a notation in the minutes that the amount approved by the committee was this, and then the bill list agrees to that amount, the auditor's a happy man.
So then it would also have to occur online. It would have to support
It
the
would have
same
to be attached.
It would have to
the
be
official.
attached, so scanned and put in and go.
Yep, that's the best way to do it.
The bill list is actually a permanent record as well, so that's maintained that way as well.
Okay, the next recommendation on the list refers to the encumbrance accounting system, which we've already discussed. What we added there is the citation in the New Jersey regulations that requires it. The next item on the list is one that we discussed back in February regarding the maintenance of the general ledger records for each fund. The next one deals with cash receipts journals maintained by the finance office be maintained timely and complete. If you look at the comments, what we noted when we were doing our audit testing is that there were probably on average of 15 to 20 deposits, usually initiated by other offices other than the finance office, that were not getting posted into the official records until the end of the month, probably after the end of the month when a cash reconciliation process was starting. That calls into question the timeliness of the deposits because the dates aren't matching up and they're chronologically not in order.
Did you find cash records? Because I know the last CFO implemented a cash record procedure for each department. So you didn't find those cash records?
The only, I mean, we cover that in here, but essentially, no, we did not. And we asked the offices.
How about the police department? Because I know the police department.
We didn't, I'm not sure if we even went to the police department this year because of the dollar value. I can tell you that the places we went to, we listed in our recommendation.
I think it's probably back in the comments.
Yeah, but I mean, there were 3 or 4 offices that we went to that nobody was able to produce anything for us, essentially, which is.
So do we know if that's happening today?
Here's what we think is the practice that should be followed and the recommendation we're making. We want everybody who's authorized to collect money to maintain some kind of a record. It can be an Excel spreadsheet, it can be a little ledger book, it could be whatever form Lorraine or the committee is comfortable and wants to mandate. What we would like to have happen, though, is that when they make deposits, because they all have their own little set of deposit tickets, that those deposit tickets get over to finance within 24 hours so that they can get posted in the official records. What we then ask is that at the end of every month, everybody who's collected any money that month prepare a monthly report that gets turned into the finance office so that Lorraine and her staff can then prove what they've got recorded as deposits to what the offices say or was collected.
And the timing for when deposits are supposed to get into the bank accounts is 48 hours from the time of receipt?
2 business days, yeah, 48 hours, but if you collect on Friday afternoon,
Right.
they don't make you go there on Sunday.
So Lorraine, are we doing that? Do we have that?
In most instances, yes. There aren't cash receipts reports formulated for each of the offices yet, but I did do one, and it does get turned in.
And deposits are getting made within the time frame?
That I can't tell you. I don't go around to each of the departments yet. I've just been trying to get my reconciliations up and going. I haven't actually sat down with all the outside, I would call them outside offices, to ensure that their cash and deposit handling is on schedule. So that will definitely be something that's addressed.
Yeah.
But when we take in checks or cash, do they come to you for deposit, or does the departments individually go and deposit them in the bank?
When I first started, they did. Now each person is responsible for each receiving agent, whoever receives it is responsible for getting it to the bank. So tax and utility run through me because they're scanned. The other.
They don't go through the scanner into the bank account?
Police does now. If it's cash, then they're responsible to take that to the bank themselves. Oh, just for PNC accounts, we can scan. I can't scan it either.
Okay. Right, the next comment deals with the unallocated cash balances, and essentially, right, this is, you know, the theater of the obvious here. The recommendation is that the unallocated cash balances be reviewed to identify the components if possible. Right? Essentially, you don't want to put somebody in a tax sale if they've already paid. Right? At this point in time, I suspect notices have already gone out, so if people have gotten a notice and they think they paid, they're going to come in with proof of payment. What Lorraine is then going to have to do is she's going to have to go back on a case-by-case basis, look at the dates that the payments were made, and then try to match them up with these orphan deposits from last year that are all sitting as unallocated. Right? To the extent that she can allocate, again, people will get credit for payments they made. To the extent that they don't get allocated, the money will sit there until we're confident that there's nobody's going to make a claim against it, and then we'll have it lapse back into your fund balance.
Has any of that happened, or like, have you found?
Not so far.
There's a possibility that it could all be general revenues that came in, and in that case, you won't have any claims against it, anybody coming in with proofs of payment that weren't posted. And that would be ideal, because that would mean at some point $38,000 worth of additional fund balance will accrue to the township. So I would be pleased.
That's the total amount.
That's the total amount of the unallocated receipts, yes. So, you know, one way or another, those things are going to flush out of the system in the next couple of years, right? And quite honestly, you know, knowing how much Lorraine has on her plate, this is not what I would call a high priority. However, if somebody does come in claiming that they made a payment that they shouldn't be in a tax sale, then it becomes a high priority. The next recommendation deals with the escrow account. What essentially we found with the escrow account is that all of the transactional activity going through the escrow account was not being recorded in the township's financial records. You have a bank account that is managed by a trust department at the bank. So they produce a record by depositor, and that would be a reasonable record if everything was reported to the bank. The problem is we had transactional activity that wasn't necessarily getting reported to the bank. We had 13 checks at the end of the year that had been written, but the bank didn't know about. So the bank's record of the escrow balances was overstated by the amount of those 13 checks.
And that was done at the end of 2012?
It was
No, 11.
11.
So
Most,
we're in 12.
yeah,
2011.
most of the checks were written in the last quarter, but not all. But most of the problem occurred in the last quarter.
And is this also the piece around the bank not knowing the account, don't like the?
Oh, yeah.
The
Well,
account?
if you look at the bank's record of the accounts, most of the accounts say Township of Greenwich.
Okay. I'm wondering if the bank didn't identify them properly, because we did send a letter to the bank with the names for those escrow accounts.
Well, that's,
Would you have a copy of that?
I have to see. if I
because
get it.
Lorraine
That's the bank.
has devoted some significant time already on this one. Because they need to be identified, because in some instances, and she's already identified some, that was actually money that was the town's money. And
Oh, is that back to what with the 90,000?
And there's at least a couple of more accounts in there that look suspiciously like they belong to the township, there may be some gold in them Nar Hills, is the way to look
Approximately
at
how
it.
much gold?
I don't know.
Oh.
You don't know. I mean, the one account that looks very suspicious to me, like an account that they've been accumulating interest over the last 15 or 20 years, has about $27,000 in it.
Got it.
Because just the way they process every month, there's a remainder of unallocated interest that goes into this one account, and it's up to $27,000.
And this is an account from 20 years ago?
I don't know how old it is,
Oh.
but I'm saying over a long period from when you first created your escrow account, it would not be unusual to have $27,000 of interest accumulate that is the property of the township.
For the record, that's due back to the current fund. The escrow trust does not get to retain its interest. That's current fund, and it should be paid annually.
Right.
Exactly.
Under the escrow laws, the township has to pay, and this is something that also has to be looked at. The township is required to pay a portion of the interest it earns to any account holder with a balance of over $5,000. And in addition to that, there is a quarterly reporting to those escrow account holders that is supposed to occur. The problem with having all the accounts, or most of the accounts, listed as in the name of the Township of Greenwich is that there's quarterly reporting is not occurring.
And
Right, so one of the reasons we need to identify each of those accounts and get names and addresses on it is so that when the bank provides those quarterly statements, they can be mailed out to the appropriate account holders so that they can review them.
So even though there may have been a letter sent, it was never really documented in the township about the research that was supposedly sent to the banks. For them
Or maybe
to
it was,
identify
or maybe it was
that.
already accounted for. I
Well-
don't know.
I don't think so.
See, what was or wasn't done prior to my coming on board, I have no idea. I did not contact the bank and ask them why they're carrying all
Right.
these accounts in the name of the Township of Greenwich. All I know is they are. And we also know is that the quarterly reports that they produce, right, there were a lot of documents we couldn't find when we were here. We found all 4 quarters of those reports sitting unmailed. So we know that the escrow holders aren't getting quarterly reports. The problem you have right now, and if there was work done, it could make Lorraine's life a heck of a lot easier, because she's gonna probably have to get involved with planning board. I mean, you know, because somebody's gonna have to track applications and try to match them up with historical deposit records so that you can try to identify them.
Well,
If anything was done, that would
should
make,
reach out to Grace.
and if anything was done on that, it would make Lorraine's life a heck of a lot easier. Because most of those accounts say Township of Greenwich, and if it's your money, it shouldn't be there, and if it's not your money, it needs to be identified as
Well,
to
in
who it
which
belongs
case,
to.
at some points, we were wondering whether or not escrows were, bills were paid from professionals out of the general fund and not appropriately designated to the escrow fund.
And that could.
And that, I sent you an email that I did talk to the auditor about, and there's nothing changed.
That could very well have happened. It's not an uncommon thing to have happen. Particularly when there are multiple applications from a single depositor, and they run short on one account and they don't have time to go back to them and say, can we move some of the money from this account to this, from phase 1 to phase 2.
Yeah, that would be the general building thing, that two phases would be.
Yeah, I mean, if your professionals need to be paid, if there's a traffic study, if whatever, whatever kind of studies are being done as part of the application process, your professionals put in the bills to be paid. There's a tendency on the part of the administration to pay. And if there's not money in the account, or we don't know which account, it may have inadvertently gotten charged to a budget. In which case, that would be township money that's accumulating in those accounts. So, first identify whatever you can identify as yours, you take, and from that point on, for some of the large ones, particularly if the applications have been settled for years, we then go back and look to see whether or not the balance really is due and owing to the township rather than to the initial
Well, we
deposit.
recognized a while back that some of this information was not being done on a computer or being recorded appropriately, and we made changes to rectify this, and the change didn't reflect any sort of, change in the reporting of the escrow.
Yeah,
So it's been many years.
our comments about the escrow accounts were included in the prior audit. So, the conditions that we came across pretty much are what my predecessor reported also.
No change was made.
Right. The next comment also deals with the escrows regarding the ownership of the accounts. The next comment is budget expenditures be posted to the proper budget period in every instance. That deals specifically with the hydrant service fee. But as a matter of growth, it should be not when the bill comes in, it's the period the bill covered. We noted that, and this is something that's also unfortunately not uncommon in the state, so I haven't made a recommendation on it. But at some point in time, the township got behind on its budgeting for its audit fees, and the 2010 audit was paid out of the 2011 budget. The 2011 audit is going to be paid out of the 2012 budget, and your building, it'll never come home to roost as long as you never go out of business, right? Because you'll always be able to pay it the next year. However, proper accounting principles say you should be matching the year that the audit is for with the budget year. So if at some point you get to the financial position where you could afford to make transfers in your appropriation reserves and double up in a reserve year to cover 2 cycles and get yourself back on track, I'm not making that as a recommendation because I know what budgets are like these days. But as a matter of good practice, if you ever get to a point where you're comfortable with your financial position, that's something you might want to consider doing. Centralized record of payroll account receipts and disbursements in summary form be maintained to support the transactional amounts. Once again, we're talking about maintaining records that provide proofs of the activity, right? Gross payroll is $363,244.22. That should be recorded as the gross payroll, distribution of all the deductions to net payroll, and you should be able to trace the deposits into the payroll, net payroll, and agency accounts based on what the payroll record shows. And then those would serve as the proof and the basis for cash reconciliations. Payroll deductions, we covered that. Once again, it's just tracking balances in the payroll agency account. Timesheets and time cards. We had some instances where we had trouble finding them. In other instances, we noted that there were no supervisory reviews and sign-offs. Right?
I do have a question about this, because as I was reading this, I was wondering about this because I know, first of all, with the police department, all the timesheets are signed off on. The time cards are signed off by the employees, and when I was signing checks, I initialed all the sheets for 2010 10 and 11. So I'm kind of wondering what this is.
Well, my staff came back to me and said that they were looking at time cards and time sheets that had employee signatures and no supervisory signature on them. Now, they also said that there were some that they couldn't find at all. I could check back and see which ones those were.
I know we pulled some for copies. Were they ever put back?
Yes.
Okay.
But those aren't
I don't know if I identified the specifics, but I will make a note
Yeah, I was
to
just wondering about
provide
that
you with the
'cause I know-
specific. Because what we had, right, and this is something that we emphasize, right? It's all about authorization and approval process, right?
Because we not only had the time cards, but we also had a vacation or a time reporting sheet that was attached to those time cards that were signed off every week.
Well,
I'm kind of surprised by that.
that's not what my staff was reporting to me that they were finding. I have to say, we had problems locating some what we considered to be very basic records. And back in February, we made mention that we're concerned that possibly you have not retained records that are required to be retained based on the schedule published by the department, the State Library Division of Archives. Right. Lorraine and I went through every file, every drawer in her office, and then one of my office staff and I went down into that nasty room downstairs and spent a day going through there looking for things that we were missing.
Right.
And so it, you know, when we say that we couldn't get, nobody gave us stuff or we couldn't find stuff, we did make efforts. And that's not to say that it couldn't be misplaced somewhere else, but ultimately, if it doesn't get to me, then I'm reporting that I wasn't able to perform auditing procedures on it. But I will make a note to get back to you on the specifics relating to the time cards and the time sheets. Monthly reports of dog licenses. Oh. The State of New Jersey Department of Health requires a report be filed on a monthly basis regarding dog licenses issued, fees collected, and amounts due to the State of New Jersey. Not happening. That needs to happen. I think one report was filed and one payment of state fees was made in the last year. And it didn't cover the whole year. It was done like in July.
So whose responsibility is that?
Whoever the dog registrar is, and
So
I'm not
the
sure
animal
who that
control
is.
officer?
If well, there's actually a position of dog registrar. Usually it's the animal control officer. But whoever's collecting the money is really the person who's best likely to do it. What we found, there were license records available, but they weren't, you know, in chronological sequence. So what we basically had, you know, the proof that we did of the money collected, or the reasonableness of the money collected, was basically stacking up licenses into piles of neutered, non-neutered, doing a count, multiplying by the rate, and saying, all right, we got pretty close. We're confident that most, if not all, of the dog license money made it to the bank. But that's what we had to do. That's not what we would normally want to do. So that was an issue. This is the one we talked about a little earlier when we were talking about financial records of the outside offices. Right? Formal record of cash received, maintained by every office, and that monthly reports are filed. Lorraine has, I know she does monthly reports in her other life. If she needs help with the forms, we have sample forms that we can give her that she can then try to fit into the needs here. What we're looking for in the way of a monthly report, right? You tailor for each office. So if you have an office that is collecting 5 different types of permits that have 5 different fees per the township code, you list them. You know, this type of a license, you know, burial license, birth certificates, marriage licenses, rate, X number of dollars. That would be printed right on the form. Do the math, come up with the calculations, add everything up, here's my total. Send it to Lorraine. Lorraine says, yep, that's what I collected, check mark, everything's good. It's when the monthly reports come in and the amounts that they say they turned in don't agree with what Lorraine has, that you start finding out that there could be errors, omissions, et cetera, from the financial statement. So the reason we're doing this is not to drive everybody who collects money crazy. It's to put one extra layer of control over the timely deposit of the money. And the more proofs you can build into the system, the better off you are. You don't have the luxury of having segregation of duties around here. Right? You run a tight ship, a lean ship, and people have to be able to take transactions and run with them from start to finish. That is the antithesis of good internal control. But from a cost-benefit perspective, it would cost you way too much money to build in a bureaucracy to develop control. It's just not worth it. You know, if you had to hire 5 people to bring in controls over, you know, $100,000 of cash receipts, well, you know, you'd be better off not collecting the money, because it will cost you a lot more to put the control in than you're collecting, right? So those are the types of things that we're looking for. There was one item that we came across in the audit, and this is going to be the last item on my list. We're not sure what to make of it. We brought it to your attention, but we couldn't go any further with our testing. And it had to do with recreation fees. Right? I mentioned in the beginning that we do analytical procedures to look for areas that something doesn't look right or something that needs further explanation. Right? When we got to the recreation fees, we looked at 2010, we looked at 2011. 2011 was way up from 2010. We went back and we looked at it a little more closely. We noticed that there was one item in there that wasn't from current recreation fees. It was a transfer from a not-for-profit organization. We pulled that out, and we then did another comparison, and there was still a significant difference. When we went to the treasurer of the Recreation Commission, he didn't have records from prior to September of 2011. So we weren't able to get anything that could explain what happened. All we know is that there was a difference.
Are you talking about the $10,000 difference or something?
No,
other than
no, no.
$10,000?
If you look at, let's see, where is the comment?
Page 95.
Page 95, yeah, on the bottom of page 95. In 2011, the Recreation Trust recorded 124, almost 125,000 in cash receipts. Of that, 10,007 was a transfer from a not-for-profit organization. So that wasn't, obviously, that wasn't 2011 recreation fees. It shouldn't be in the 124, back it out. Compare that to what was collected in 2010, you have, you know, $45,000, $50,000 difference, right? So again, we started saying, well, did you expand the number of leagues? Did you expand the number of children in the programs? Did you expand the number of teams in the league? Nobody knew, right? Nobody said yes, no. Nobody could say yes or no. They just don't know. So it's in here. We don't know what to make of it. I'm not making a recommendation. I just thought it was appropriate that the governing body should know that there was a difference between the 2 years.
Well, when you say you would strongly encourage the committee to follow up on this matter, in terms of what? Is this something where maybe we can find out whoever was in charge of rec in 2010?
If you could get a record of what was collected in 2010, because we couldn't get a record of what was collected in 2010. I mean, there's a myriad possibilities of what could have happened, and some of them are not pleasant. But I mean, you know, we've dealt with things like this before.
Who was on rec in 2010?
I can't tell you. You know, we do work for nonprofits. You know, I can't tell you. We've had 2 Little League treasurers in 10 years go bad on us. So we don't know what it is. I'm not saying that that's what it is. Clearly, I'm not saying that's what it is, because I have not seen any audit evidence. In fact, we couldn't even see what happened for the first 9 months 8 months of 2011, because the new treasurer started in September.
Mhm.
And by the way, he's doing a nice job. So what he has started in 2011, if that continues, that'll be fine.
At
But-
one point, we had an independent auditor, didn't we, Dan?
Yes.
From POHAC.
Mhm.
So maybe you can talk to Bob offline,
But-
because you know more about that than anyone.
There was no treasurer in 2010. There wasn't a treasurer for rec for a couple of years.
Wait a minute, what's her name?
Colleen Taylor.
Yeah.
But she had stepped down.
Yeah, but that was in 2010 she stepped down.
No, it was prior to that. I think it was like 2009.
We never got
Yeah.
a letter that she was stepping down in 2000.
Yeah, it's when her husband passed away, and she stepped down.
Well, Dan, would you
Yeah,
be
I don't
able to
remember
meet
that.
with Bob offline? I mean, it's
Sure.
obviously not tonight.
Okay, I mean, to be honest with you, my guy asked, if he asked the current treasurer if there was any way that he could lay hands on some of the prior stuff, and he basically said he had no idea. So, we'll talk.
Well, Dan was the former president.
Okay, but essentially, we'll talk, but, if we can make rhyme or reason out of it, that'd be good, because then it would allay my fear.
How much fundraising was done in 2011?
The money coming into the account for the first 8 months of the year wasn't specific. So sometimes it would say basketball, sometimes it would say basketball fundraising. So it's really hard to tell, right? That's the problem. The problem with the lack of detailed source documents is that it's hard to tell what you got, right? And if you don't know what you got, you don't know what you should have had.
No, they did a lot. They started a lot of fundraising things, selling
in
hoagies.
2000.
Okay, well,
clothes
that would be
things like that,
Okay.
which was never done before.
and that would be a very viable rationale for the difference, and that was the kind of thing. If somebody could have said, look, we started doing fundraising, here's what we did in fundraising in 2011, here's what we did in fundraising in 2010, the difference is $35,000, this comment isn't there, right? The only reason this comment is there is because we noted a difference when we started the process, and it never got explained during the process, right? And it's not a statement that anything is wrong. It's a statement that it's an unresolved issue.
What about the audit report? We have the CFO report, so I think we don't.
Does anybody have, I guess, should we just go down the lines? Anybody have any questions for Bob?
The only question I have is, I noticed as I was just looking through this, that Bob, your letters, in the first, page 2 through 5, both letters are dated July 15th.
Yes.
Yet we're just discussing this in October, and I was just wondering if there was some reason for that.
Oh, there
I
is.
know I've asked Lorraine a few times about the audit report.
Yeah, we were done our field work on July 15th. When we get done our field work, we need to get certain representations from others before we can release our report under generally accepted auditing standards. So we're basically waiting to get a letter. And once we got the letter last week, and we filed the report this week.
So we need to get the letter from where, the state, or? where
The
you get
letter we were
from?
looking for was from the attorney.
Oh, from Brent.
Yes.
So he's had the audit report since?
No, he hasn't had
Okay.
the audit report. He had, well, here's the way it works. When we start getting close to the conclusion of our audit, we draft a letter for the finance officer to print on township letterhead and send to the attorney requesting representations regarding the status of any litigation pending or threatened that could have a material impact on the financial statements. All right, I sent that to Lorraine sometime in June. We asked for a July 15th response. We got an October response.
So that's from our township attorney you're talking about?
Yeah, that was the one that we waited. There were a couple of others that we sent out, but that was the one that we waited on.
Is that because of pending litigation? That he wasn't sure what the costs were going to be?
Well, there was an item on
I
his.
don't believe it's just ignoring the
No, there was an
request.
item on the list that has the potential to be material, and that, I don't ask why, I just look for the response.
Exactly.
But if you look at the note 15 to the financial statements, we don't go into glorious detail on it, but there definitely was an item in your outstanding inventory that is not covered by your insurance and could be material.
Okay. And what page is that on that you were referring to?
It's note 15A, page 45 of the financial statements. So that could very well have been the reason for the delay, because there are, under the accounting standard, and the lawyer's handbook also deals with this, there is a loss contingency rule that basically says, for any litigation that's pending or threatened, the client or their legal representatives have to make an assessment as to the probability of an adverse outcome. And if there is a reasonable probability of an adverse outcome, the need to disclose becomes very clear. And further, you take it one step further, if there is a likely adverse outcome and the amount of a loss can be estimated, we would be accruing a liability on the financial statement. So in this case, you've got litigation that is still wending its way through, and in fact, I don't even think that the township attorney's handling the case. I think it's special counsel. So he may have been waiting for something from special counsel.
Okay, I got it. I was just
But in the end,
Then the end result, I've never heard this explanation before, but I'm glad that you clarified that, because I'd be wondering why we didn't know about this, step when litigation was in play for the past 2 years.
well, maybe the reports came back nice and clean, nice and fast. I mean, the accounting standard is hard and fast, right? You do not release a report until you have all of the required representations from the client. And I mean, if you release the report without it, you have to qualify your opinion. The opinion on the prior financial statements wasn't qualified, so I think it's a safe assumption that the representations were obtained.